Welcome to The Explainer. Today, we are putting a giant of the automotive world, Magna International, right under the microscope. We're going to dive into its business, figure out what it's really worth, and look at all the risks to see if it's a smart place for your money long term.
So with the stock trading around $90, the market seems pretty optimistic, right? But our deep dive analysis brings up a pretty big question about its actual value. Is all that confidence maybe misplaced? Let's find out.
All right, let's get right into it. Here's our game plan. First, we'll get to know Magna's business, then we'll dig into what it's really worth, check its financial health, and finally, we'll land on a verdict.
So let's start with the absolute basics. You can't really analyze an investment until you know the company. So who exactly is Magna International?
Okay, so Magna is a powerhouse in the auto supply world. But here's what really makes them special: their incredible reach. You see, unlike most of their competitors, they play across the entire value chain. They don't just make parts, they can literally build an entire car from scratch for the big brands.
Now, let's get to the real heart of it for any investor. What is this company actually worth? This is where we tune out all the market chatter and focus on the cold, hard fundamental value.
Before we jump into the numbers, it's really important we're all on the same page with this idea. Intrinsic value is not the stock price you see bouncing around every day. Think of it more like the company's true underlying worth, based on all the cash it's expected to make in the future. It's what the business itself is really worth.
And here it is, the core of our whole analysis. The market is saying Magna is worth $90 a share. But our calculation, based on its ability to generate cash, pegs its intrinsic value at just $68.50. That is a huge difference, and we need to figure out why it exists.
Now, let's see how the numbers on this slide kind of tell that story. Check out the 5-year revenue growth. It's pretty slow, just 1.67%. Now, when you see that next to a price-to-earnings ratio of almost 19, you start to think, maybe the stock price has gotten a little ahead of the company's actual growth, and that really backs up our lower intrinsic value number.
So to really get to the bottom of this valuation gap, we've got to pop the hood. Let's do a deep dive and check out the company's real competitive strengths and its overall financial health.
Okay, let's tackle a really crucial question for any long-term investor. Can Magna actually protect its business from competitors over the long haul? In other words, does it have what we call a competitive moat?
And the answer is, well, it's kind of complicated. Magna's huge size and its deep, long-standing relationships with car makers give it a decent or moderate moat. But, and this is a big but, it operates in a super competitive space and has very little power to set prices with its massive automaker customers. But despite those pressures, Magna has a major strength. It is a cash-generating machine. We're talking about nearly $2 billion in free cash flow over just the last year. That's the cash that's left over to pay dividends, buy back stock, and pour back into the business to grow.
All right, let's take a step back now and look at the bigger picture. We're going to balance all of the company's strengths against its weaknesses to get a full view of where it stands.
This SWOT analysis sums it all up really clearly. On one side, you have these fantastic strengths, like its global scale and all that cash it generates. But on the other side, you've got some pretty serious weaknesses, like its consistently low profit margins and a business that gets hit hard when the economy slows down.
So it's absolutely crucial for any investor to understand these risks, and probably the biggest one is the power held by the big automakers. I'm talking about companies like Ford and GM. They can, and they do, put the squeeze on their suppliers to lower prices, and that fundamentally limits how profitable Magna can ever be.
Okay, so we've analyzed the company as it stands today. Now let's try and look into the crystal ball a little bit and explore what the future might hold and what that could mean for investors.
Looking ahead, we can map out a few different paths. In a pessimistic bear case, the stock might only be worth around $58. Our base case, what we think is most likely, is that $68.50 number. And even in a really optimistic bull case, let's say the whole EV transition really accelerates things, the value might only hit $84. The key thing here, even our best case scenario is still below that $90 price it's trading at today. Now, this table is an incredibly useful tool if you're a long-term investor. It shows you the price you would need to buy the stock at today to have a shot at earning a 9% return each year. So, for example, if you're planning to hold this stock for, say, 16 years, you'd really want to buy it at or below $65. All right, we've looked at the business, we've crunched the numbers, and we've weighed all the risks. It is time for the final verdict. So to wrap it all up,
This is a solid, well-run company that generates a ton of cash. There is nothing wrong with the business itself. The problem is simply the price. The current valuation is just, well, it's too rich to offer a really attractive return for a long-term investor.
So based on all of this analysis, here's our recommendation in 3 simple actions. At the current price near $90, it's a hold. If the price were to take a dive and fall below $65, that could be a potential buy signal. And on the flip side, if the stock keeps climbing past 95, it might be a smart time to trim your position and lock in some of those gains.
And that's our deep dive on Magna International. It's a really solid company, but it looks like the price is just too high for now. So now we want to hear from you. What company should we analyze next? Drop your suggestions for us in the comments below.